Hello, everyone. Welcome back to a new episode of Decoding Market. Hello, sir. Welcome to the new episode of Decoding Market in three moves. So, markets are noisy, headlines are endless, and recent times headlines are crazy. So, let's cut through the clutter. And in the next few minutes, we will break the market into three clear, actionable insights. Whether you're a trader, investor, or just a market curious person. So let's get straight to it. So Rohit sir, let's begin the decoding and welcome back again.
First day of the week, and we end up with a doji. For those who don't know what a doji is, it's basically when the opening and closing for the day are almost the same. So it's almost like a non-event day. मतलब कुछ नहीं हुआ. You just wasted the whole day doing nothing. That's what today was.
So moving forward to the next quarter, right? After the Jane Street Millennium Management in Sebi's crosshairs is another trading giant about to fail. What's your
So this
thought
is an
on this?
interesting story that Palak ran. He often quotes my analysis also. So when he put it across, yeah, I mean, see, I'm happy if something does happen because I've been saying it. They can't just be one person doing something abusive in the options market. The way it has been moving for a long time, a lot of rotation in stocks makes you feel something is murky, but you can't pinpoint what it exactly is because you need a lot of data and analytics to go deep. So if Sebi does come up with more names, I think it's good news. However, it is not being portrayed like that in the media. Now, I don't know why the media is not portraying it like that. There are two potential reasons. One is, of course, you need news every day, so you have to say something. So they're just saying
Mhm.
something that, oh, this will affect the options volume will come down. And they're saying that just for Jane Street. And I'm saying, like, why not three, four more? Let's just get the whole rot out of the system. Uh, who is doing this options volume? Is it me? Is it the next retail investor? So when we say that volume will come down, it affects whom? They're making it sound as if it's bad for everybody. Why is it bad for me? I mean, if I want to buy 10,000 Nifty, I could buy them 20 years ago also, within a second. That liquidity was enough. Who is it impacting? I was running a long short index futures fund. We were squaring up lakhs of Nifty and buying, going long to short, short to long, stop and reverse system in futures within seconds. Uh, and this is 2006 and 7 and 8, 9, 10, 11, 12. Now we are worrying about option volume will come down. So again, I say option volume in India is all-time high, record of the world. थोड़ा सा कम हो जाएगा तो किसको फर्क पड़ रहा है? The answer is very simple. Some brokers who are executing those trades for those guys. Who cares?
They are making money out of it, sir. They will care about it.
So the only guy is cribbing our brokers, and the media is reporting it as if it's our problem. How is it my problem? If I want to buy options of a stock also, Reliance options I want to buy tomorrow, call options, I can still buy. Jane Street or no Jane Street. Somebody will give it to me. There are a lot of writers and a lot of people running hedge books in India. There are enough people with money who will happily get a better return on their spreads to provide that liquidity. So this is just wrong. This kind of reporting is just wrong. That's what I wanted to say. Cleaning up the system is not a bad thing. It's supposed to be a good thing, and I hope they find more actors. I hope they find some Indian ones because I find it very hard to believe like all the bad things are done by some foreigner sitting in some other country. I find that very hard to believe. So anyway, that's my take on it. This is the best thing that has happened in years for cleaning up the options market. And when you'll actually see smooth moves, मतलब stock को 10% move होना है तो होना चाहिए. ऐसा नहीं कि it gets stuck every 2%, which is what the manipulation is. It's called trying to manage volatility, which is helpful to writers because then they keep earning the premium. But directional
Mhm.
traders end up paying the price for that. There should be short squeezes when you've introduced delivery settled options and you have never had a short squeeze. I find that hard to believe.
That's opposing. Like what happens in actual thing that is totally opposite to this.
Yeah. You can see it in the US market. It cannot be like so simple. So anyway,
Hmm.
I'm happy the cleanup process is started rather than cribbing about what happens next and what if this one goes. And it doesn't impact me.
It's only the brokers who are screaming about it, right?
You think about,
Anyhow,
okay, I mean, how much will NSE stock come down because of one guy getting thrown out in options market? Maybe that's the worry. If not the brokers, you're wondering about exchange stocks because exchange stocks are getting listed. So will the
hmm.
volume come down and business be affected? ठीक है 10% कम हो जाएगा ना, they're anyway growing at 50%, instead you will grow at 40%. Does that change your
Right.
valuation? Anyway,
Not. So let's get to the next question. And this is reference to the recent video that you posted, right? So the FMCG sector is the best performing sector today, and it might be stating something new. So can you please throw some light on it? What
no,
you
no.
meant by
So
this thing?
yeah, so it has been in what we technically call a downward flag. Let me just share my
Hmm.
chart on this. Okay. So I've published this chart on Indiacharts also in the morning of the FMCG index. Okay, so it's this downward channel. We reached the bottom end of the channel, made a near double bottom, and we made a higher high. Now, when you make a higher high, that's a Dow theory trend reversal. Although you already had a Dow theory trend reversal when you surpassed this high. This is a further confirmation of that. So what it means is that maybe we've started the next move higher that will actually get us to break out of this zone. So in near term, that's a positive, right? That's a bullish setup. But when we look very, very long term, and it's really headed up uh, maybe to the top end of this channel, what will be the percentage returns you will get from here to the top end? Will it be more than realty sector, metal sector, and among others? So there are two parts to answer this. One is understanding that how FMCG has performed over time. Okay, so over time means that there are phases where it's done very well and then it's not done so well. So here is an explanation. The last bull market starts somewhere after 2001 to from here. Now you do have the
Hmm.
FMCG index appearing to go up, but if you actually look at stocks like Hindustan Lever, ITC, they actually didn't go anywhere for 8 to 10 years. So this increase was largely by domestic FMCG, which was just getting recognized in that phase. But basically, the returns here were sort of negligible for this sector. Here, they were big performers because other things were not doing well. All the cyclical sectors were not doing well. So we've seen this 10-year cycle, 10 periods of below par returns, and then 10 years of outperformance again and again since 1990. So 1990 to 2000, best sector to own. 2000 to 2010, worst sector to own. 2010 to 2020, best sector to own. And 2020 onwards, I believe it's the worst sector to own. And that is what I showed in that video also using heat maps, is that even if we do 1 month, 2 month, 3 month returns, so if I just go back to today where FMCG is on top, you go to 1 week, it drops to fifth number. Okay. Moment I go to 1 month, it drops to second last. And if I go to
Hmm.
3 months, it drops to last. So what I was saying is that on a slightly longer time horizon, it's the worst performing sector anyway. Other things are going up much more. Metals are up 21%, autos are up 20%, ITs up 18%. So there are other places to go than FMCG. Unfortunately, even pharma is down there. So these are the weakest, the defensives, and so yeah, that's what I was trying to say, is that I wouldn't want to, even if FMCG goes up, I don't want to invest in it because I will underperform compared to other sectors. Other things will go up more than FMCG, even if it goes up. Fine, if you have a love for FMCG, fine, but I don't exactly have a love for anything that I want to perform.
Hmm. Got it, sir. Uh, yeah. So then moving to the next question. Right now, the Nifty is near record highs, but FIIs have been pulling out their money and global tensions are rising. If you were advising a retail investor sitting on decent gains, would you tell them to book partial profits or relocate it to safer sectors or stay fully invested? And like, how would you decide this situation? Just wanted to know
We
you.
we just saw
Because
the
with
we just saw the
hmm,
halat of safer sectors. Yeah, go on because you're saying
so
something.
because as around like India and US trade deals is just around the corner. It's tonight preparing fresh tariff letters, right?
Yeah,
So
we
oh,
hope it is tonight. Yeah, we do hope it is tonight.
sorry.
So because they are saying that they want to start issuing from today,
Hmm.
and from today means today, tomorrow, and then they've also said that 1st of August. So that means they will keep having negotiations and keep issuing letters till 1st of August. So it's not even like a one-day thing, but going to be a process. The question is, has India reached a deal? So somewhere over the weekend there was a lot of news flow around. Oh, India has concerns about its domestic labor and specifically agriculture sector, and we can't be easy on that and back and forth. So there's definitely some discussion going on, but at the same time the US wants some deals to be complete. So you might end up with something which is like the first, what do you call it, like the first blueprint, and it may not be the final thing, very similar to what happened with UK. And then you'll continue to work upon it. So something like that may happen. It will definitely ease the tensions because whatever tension is there, it is based on the idea that, oh, if they don't come up with a deal, then the tariffs are going back up, from 10% to whatever 50% or something. So I think that's unlikely. The US will want something to come out of this, otherwise it also looks bad on them that they created a lot of hue and cry and nothing came out of it. So hopefully we will come out with something which is reasonable, and that will ease the pressure we are seeing in the last 2 days on the market. In fact, pressure we can see, it's just down and flat. It's not exactly falling apart. It's not like what was happening in April when the first tariffs were going to be announced. One day before that, the stock market had already fallen, from almost 23,800 to 22,800, almost 1,000 points before that. And then on the final day, it gapped down by 7%. So that's not what has happened here. Here we are barely down by 300, 400 points on the top. What is the high? 26,000, sorry, 25,600, and we are at 25,300. 300 points, 1.5%. That's all we are doing. So the market is also not taking this that badly as it did the first one where something bad was coming. Now the hope is that slowly it will get settled. So hopefully the tension eases overnight. Once you start seeing the letters, you get an idea of what type of action they're taking. And if India's letters come out first, all the better for India. We should be ready to take off from there. So your net answer is, what should people do? They should hang on. Not a time to run away. The time to run away was last year September. Now it's not the time to run away.
That's why most people are like they are getting very much tense and afraid. Ki, should we stay in the market? Should we run? And should we relocate the funds? So that is where people are getting very much confused. And due to
Why?
this,
Because they're reading too much news. So you can switch off the channel. That is the only easy solution. Stop getting newspaper in your house is another solution. My wife keeps saying, no newspaper. COVID mein first time we shut the newspapers. After that, for 2 years, we didn't get a newspaper at home. Or 3 years almost. Then we got started again. I got started again. I said, थोड़ा तो न्यू कुछ तो पता होना चाहिए दुनिया में क्या हो रहा है. But yeah, that's the only way, is don't read the financial press if it concerns you so much. But the simpler thing is look at simple technical readings and setups. I mean, as long as we are making a series of higher highs and lows, or we are holding above the moving average, simple things tell us that the trend is still intact.
that's right, sir. So that's it for today's questions. So that's a wrap up for us. So, sir, let's take on the questions asked by the viewers. So the first question asked is from Ajay Bansal.
If you are able to understand what he has written, please tell me.
When capex maximum by government and government sub liquidity to control inflation, that why taking some time for consolidation and degree in channel of market behavior is also low. Is that also a reason for market? I think so, sir. He misspelled some things over here.
Grammatically, all the sentences are wrong. They make absolutely no sense.
Yes.
Is that also a reason for market? What does this mean? For the market's existence, for the market's not existence, for it going up, for it going down? What? You have to ask a question. That is why taking some time for consolidation and degree in channel market behavior is also low. What does that mean? I am getting a headache here. I take the next question.
Yes, sir.
Can we share Nifty long-term Elliott wave count starting from inception? See, inception is like I have a couple of different alternate counts for Nifty since inception. Wait, let me open it and then I will share my screen. Okay, I have taken a quarterly chart. Now let me share. Yeah, you can see. So now there are some interesting things that we have to actually think about when we see a very, very long-term chart here. But let's presume I'm only seeing Nifty without considering Sensex. I say that because where I'm marking wave 2 right now, there Sensex actually made a new low. So it causes some kind of a variation in the count. And this is one potential wave count that we have been trying to attempt. Okay, so this is sort of a sort of one structure. There is one possible variation to this, and that variation is that it's like this. But even within this, again, we have started another series because this is an important low. So from here, I would start a fresh impulse. Okay. So these are some of the variations, but I actually prefer yeah, it's something like this. I mean, see, okay, there, like I said, there are one or two saved wave counts. I was just trying to type it and show me something has saved, if it makes sense to you. Something that we've tried. It's the same thing that we've tried to do. Okay, this is sort of conservatively saying we are in the fifth. More aggressively, we can say that we are in third or fifth, in which case we have a long way to go. I want to keep that alternate open. This may or may not be 3. It could be, it could not be. If it's not, then it will end up being. I'm actually tilting towards this being more correct. But time will tell. Time will confirm whether this is more correct. Rather than 3, 4, I will go with 1, 2, 1, 2, which means multiple extensions in the fifth. Only an Elliott waiver would have understood that. What does it mean? 1212 means that this bull market will go until 2030, to make it simple. If not, it will end by 2029 or 27, somewhere in that range. 27 maybe. If it's 1, 2, 3, 4, 5, it ends by 27. But if it's 1, 2, 1, 2, and I think eventually it may convert into 1, 2, 1, 2, then it's way above 2030 before it even ends.
Guys, we will suggest you to take the mentorship course. It's a very, very good way of learning Elliott waves theory. You guys will learn like the entire theory. So moving to the next question, it's from Dheeraj.
Is there divergence in RSI quarterly charts in XAU USD, meaning gold and USD terms, and we should read much to it? Okay. Now again, I have to go to my chart. It's a good question. I think the answer is no, but let's see. Let's check it out. XAU USD, which is gold. Did he say quarterly?
No, sir.
No. Huh? He said divergence on which chart? Quarterly, monthly?
Oh, quarterly. Sorry, it's quarterly.
So see, now there are two things. At what level should I look for a quarterly divergence? I'll tell you. If there was a divergence here from year to year, that is a reliable divergence for the immediate structure. If you try to tell me that this is a quarterly divergence, I'll tell you it's just your imagination. Why? Because this move is not over. So I don't try to compare such long-term tops for divergence between 2010 and 2025, 15 साल बाद. And also, when do you know कि 15 साल बाद ये जो चल रहा है ये इधर से इधर ओके इधर नहीं हो जाएगा. मतलब when do you consider that it is a divergence? Only after it has fallen. So you will not know. So therefore, the divergences which you can spot reliably and use are the ones that occur in the immediate setup. The best example of that is here. See, this the RSI went high, all-time high here. Then you got this. Okay, that is possibly your divergence. Let us see. And so I'm giving people a class only now. And divergences are often best checked on a line chart. So I'm also changing the chart from bar to line. Otherwise, what happens? You may make a new high in the bar, but RSI is calculated on closing prices, if you know the mathematical formula of RSI. Therefore, closing prices is where the divergence should occur. This is what has happened, right? Prices went up, RSI went down. This was a negative divergence that caused the correction. Now, if you go and compare, but 2015 to 2000, and you want to do this divergence from year to year, please don't waste your time. Don't. Okay. That's just your imagination. That's wishful thinking. So if you get a divergence in the current structure, it is relevant. See, there's one here also. Go back to 1980. See this. Between these last two tops, you have a divergence. This is relevant. This is where the market topped and then went down for the next 10 years or what more. It didn't surpass that high till like 2 decades. So you're looking at a quarterly chart. Look for high degree divergences. Not for 20 years apart. Don't do that. मंथली पे भी नहीं है डाइवर्जेंस. लोग टॉप ढूंढ रहे गोल्ड में. मैं भी ढूंढता हूं, बट आई ओनली सर्च फॉर इट फॉर अ करेक्शन. ओवरऑल यूर इन अ बुल मार्केट. वो करेक्शन भी गारंटी नहीं है. अभी तो ऐसा स्टोरी है. इफ इट बिकम्स अ ट्रायंगल. So corrections are not always downward. Sometimes it takes time and then it becomes a sideways correction. And then it becomes wave 4 and then it runs away. And we keep thinking price नीचे आएगा नीचे. But time wise also correction हो जाता है. even though the momentum indicator is in sell mode. So the weekly momentum is in sell. Prices are going sideways, but the indicator is coming down, 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 down. Indicator will come down. Prices will go sideways. You have to accept it as a consolidation. You can't force price to come down. Weekly RSI तो आ गया ना नीचे 58 तक आ गया है, which was almost at 80 without much price damage. Just by going up and down, the RSI comes down. Because the RSI essentially is a sum of the total movement of prices, up, down, 5 रुपए ऊपर, 4 रुपए नीचे. It's a summation of that. It's not really about how high prices are. So moment it starts doing up, down, the number of ups and downs become equal. The RSI drops to 50. Just for people's understanding, if you study the mathematical formula, you understand why it behaves in a certain way. It's good to have some mathematical grounding.
So moving to today's last question of the session.
The last and final.
Yes, sir.
Thanks for the counts on Nifty. That's a repeat question from someone, not another person. But anyway, what if you please look into Microsoft wave counts? No. Let's not do that. It looks like the script in the last fifth of super cycle degree. Super cycle is a concept that was created for the stock market as a whole, not for a company. There is a meaning to super cycle. It has to do with the moods of the entire society, its expansion, growth, demographics. A lot of stuff goes into the word super cycle. In a stock, just look at one cycle at a time. So it may be completing 5, I don't know, at some degree. But Microsoft actually broke out of a multi-year congestion, MSFT, in 2010 or whatever, 11. It's been going on since then. So from then also, to really think about it, it could be extending at multiple degrees here. Even the 3-month chart shows so many subdivisions. I'm not sharing the chart, but I'm just saying. Let me share if you want, but just a second. Or क्यों Microsoft में most Indians are not interested. But anyway, I'm going to a yearly chart only. Okay. अभी इसमें कोई बोलेगा fifth है. Okay, I could very well argue that this is 1, 2, 3, 4, 5. But the thing is that यहाँ पे I think when I'm looking at this is overlapped. So it would be 1, 2, 1, 2, 3 also. Hard to say. Where is the end point and will it extend further? Could be in 5th, but I don't know. I can't really go down to the short-term internals. There's another tricky thing in this, which we can't figure out sometimes. It's this. We'll not know till later whether wave 4 is either a running correction, which is over, or which is still going on. It will end up becoming a triangle, which some people will call an ending, and then it will go into 5th wave from here. Essentially, what is a running triangle? So too early to say anything of something ending over here.
So this was it for today. This was the last, and so we are getting
But it was a second question from the same person. So I would say let's take one more.
Yes,
some questions coming from who's this Capex Trade.
Bank.
VK Kapadia is saying gaps are down. Many, your opinion, gaps are down, and what? People, you should ask your full question. I cannot relate with everything. Anyway, sir, NBFC Bank will outperform the market as everyone is suggesting, or it will consolidate and move ahead. It will outperform when people say it is a 1 year story. So when you say it, or it will consolidate more ahead, consolidate. तो हो consolidate short term or long term? 1 year consolidation तो नहीं होने वाला. That is already done and over. Okay. If you're asking long term, short term, yeah, there will be phases of consolidation. बीच में 1 महीना अटकेगा, फिर चलेगा. On a 1 year basis, NBFCs should be right now expected to be the best performing sector. I mean, segment of the financial sector, as money is chasing financials again. So
VK Kapadia was saying about the Nifty.
but
downsides.
निफ्टी में डाउन गैप्स किधर है?
These are like
वेरी आई कांट रियली, मतलब मार्केट तो ऊपर जा रहा है तो डाउन गैप कहाँ पे ढूंढो? और ओनली ओपनिंग गैप्स ही इज टॉकिंग ऑफ. ओपन नीचे होता है फिर ऊपर चला जाता है. Yeah, recently we are seeing a lot of times market is opening higher and then selling off also intraday. Gaps in Nifty, I mean I understood gaps in Nifty, but gaps, you're saying downside gaps. That's why I'm asking VK key gaps, but gaps in Nifty is fine. I mean, what's wrong with getting gaps? And a lot of gaps are actually, if they are on the upside, they actually sign of third wave, third of third. So it's a very strong sign when you get upside gaps. We aren't getting enough upside gaps, I would say. On the contrary, let's wish for more upside gaps. Because a gap is when the high and low don't cross over. I can't see a gap in the last 10, 20 days right now on a actual gap. So, and not opening gaps. Actual gap is one which is left behind on the daily chart. So all the opening gaps are also getting filled intraday. That's why, to me, a left behind gap is a gap, and that is not happening. That would be a very good sign.
So, viewers, I will request you all to complete the questions. Once you are asking the question, just ask in an entire full question length. Because there are many times that we won't get the context on what you are saying about. So this is where I like. So there is one more question, but there are around like.
So just for people to get in touch if they need to, this is where you go. You'll get more insights on the mentorship program.
Yeah.
What are you saying? One more question. One final one. One more for the one for the road.
Yes, sir. So it's again from Dheeraj.
Sir, I'm starting my options trading, more of DNG option spread. What should be my ideal risk per trade I should keep on the initial side? What is this DNG options?
Viewers, I suggest you to ask our entire full question instead of writing short forms.
Yeah, because मुझे भी सब कुछ नहीं मालूम जो सब लोग करते रहते हैं. So I'll presume you mean strategies. Okay, so if you're creating strategies, it has a predefined risk. So ideally, you should use a strategy builder. Many sites have it. We probably have one on Strike, which is better than the rest. That's always the objective. But a strategy builder, some brokers also have it. Helps you know the risk reward of your strategy, if that is what you're doing. So then the risk is defined, कि इतना risk है ये strategy का. So then you cannot say what is ideal risk. But if I'm a buyer and seller of options, yeah, there is something as ideal risk is that on the trade itself, you don't want to risk if you're a buyer more than 50% of capital. But there is a secondary question. What is the size? What is your per trade capital allocation also. So that it further reduces the risk. Like it could be 25% or 20% of the option book that will you exposed to one option trade on the long side. If you're selling, it's again a complete different ball game of how you spread your sales on options. You don't do it all at once. You can do it at different points in time, because in option selling, you're not constrained by timing the market, which is what the option buyer has to do. So you can sell at any point of time, and you can time it a little bit, so you don't have a hurry today. You can time it based on the trend, and then build accordingly and spread over several days. You can add to it. So the ideal point should be that in option selling, you should not lose. I mean, see, the return comes to what here? Depending on your strategy in selling, some people only get to 14-15%. Yesterday, a friend of mine showed me something. He's achieving 30% pre-tax. Now, it depends. Now, so your risk reward should be, if this is your reward, your risk should be a percentage of that. It should be 1:2, 1:4, 3:8, something like that. 1:4, 1:5. That's got to be your risk reward. So if you're going to make 30% returns, you're going to risk 5 to 8% loss also.
Right. So that's it for today, sir. That's
And
it
then
for
you need
today,
to have more,
viewers.
and you need to have more winning trades than losing trades with that ratio. So I
Right,
could
sir.
have a 1:3 risk reward, but my winning trades, the rewards will be in more trades winning, and the losing trades will be fewer. Yeah, that's all for today. I think Shubhajit's frozen for a second.
Sorry, sir. It was a connection issue.
Yeah.
Yeah. Thank you, everyone. So that's where I froze. Just the exiting part. So thanks everyone for joining, and let's meet in another Power Pack episode on Wednesday, 4 p.m.
So
Let's
there's one interesting question related to what we spoke about. So I'm going to answer one more. We are answering more questions today.
Sure.
This is the value
Sure,
trades question. I don't know if I can click. You can click on it. Nifty PE at 23.
Yeah.
Tariffs around the corner. How do you justify the place Nifty is at presently? So interesting question. The Nifty PE has been gyrating between 18 times and 22 times for almost more than a year now. Okay. And it had reached 30 plus in 2021-22. So essentially the PE ratio fell, not because the stock market fell, but because earnings went up. And partly because we went from what do you call as standalone earnings to consolidated earnings in the calculation of PE ratio. That caused another 20% drop in the PE ratio initially. And then after that, earnings were growing very rapidly in 21, and so PE ratio came down further. And then after that, the market has gone up very, very slowly in 2023-24, such that the PE ratio could never get above 23 times. So in that sense, yes, we are in the top end of the 1 year range, 18 to 23. The question is, will we get past 23 and go towards 30 again? That is the catch. That is where the big returns are. When the PE re-rating happens. Now, when would a PE re-rating happen? When the earning cycle revives, when growth comes back in a bigger way. We've partly seen that in the last quarter, some earnings revival, but people are don't feel it's good enough. We wanted the pace to accelerate further. But the current move in the market is justified by that partial revival in hope that further revival will occur. That is how it's justified. Now, if that further revival doesn't happen and earnings collapse, surely then this is the end of the road. But that's the bet that the market is taking based on interest rate policy, all the geopolitical news behind us, government spending, and so on. Global liquidity, whatever. So various reasons why anticipation is that it would slowly but surely accelerate. Maybe there's one more rate cut. That's it.
Yeah. So that's it. That's a wrap up for today. Thank you everyone for joining, and let's meet on Wednesday, 4 p.m. So trade safe, trade smart, you strike. Again, I
Thank
will
you.
say that. Thank you. Thank you, sir.